Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
We're speaking with Eric Hadik. He's the president of InsideTrack.com. Welcome back to the show, Eric.
Thanks for having me back, Jim. My pleasure.
After we found out that Donald Trump would be the new president of the U.S., in Asia and Europe, the markets reacted negatively. But in North America, the equity markets are up. Can you maybe explain that?
Well, I think that anything like this always has an overreaction. In fact, funny enough, one of the topics in my November newsletter was what I called the principle of action overreaction, and that you always see it in the markets. And it fit very nicely with short-term cycles and indicators that were looking for a drop into this time frame and then a quick bounce before a more significant drop in late November. So it's one of those things like you see in the market so often. You'll get an initial reaction, which in the end might be an accurate reaction, but it's so concentrated and goes so over the top for that initial phase that then you get a kind of boomerang effect back the other way. And even end of last week, beginning of this week, I was talking about in my weekly relay, some weekly extreme downside indicators that were being approached, and why that should trigger a rebound this week and potentially into next week. So that's, the markets are certainly fitting with that, and again, I think it's the initial reaction in global markets and even in U.S. markets overnight was that a lot of uncertainty. The markets had started to factor in a Clinton win, and then as some key states started to go the opposite way, all of a sudden you saw, even the S&P futures overnight, they would drop 20, 30 points and then level off, and then the next bit of news that favored Trump came through, and all of a sudden the S&P dropped another 20, 30 points and then leveled off. And it's markets don't like uncertainty. They come in this morning. You don't have a replay of the 2000 election where there's lots of uncertainty. Instead, you have a different variable to deal with, and then the markets kind of go back to focusing on other things for the near term.
Once you've had those little readjustments, when do we see cycles get back to normal?
Well, what I have said all along is that I was looking for a seismic shift to begin taking hold in late 2016 and narrowing that down to late November 2016, and that's when I thought a 15 to 18 month topping process in the stock market would then start to transition into an actual bear market. And so I think that the cycles have been pretty right on all along, and even the market action of the days surrounding the election here have corroborated that, even though they've gone to some extremes. When you step back and look at where and when the highs and lows were anticipated, the market came very close to fulfilling that. So I think that you're going to see normalcy to some extent return to the markets, but then I think that there will be more of a looking ahead and the anticipation of, okay, what does this mean for various markets and various complexes of markets, and I think you are going to see a big shift. We talked about this back in one of our interviews. I think it was in early March. In fact, I think you even titled it something to do with the markets and election cycles. And one of the things that I was really describing then, was describing in my newsletter too, is that one of the keys to the election I thought was in the dollar, both what was happening in the dollar and what my cycles were telling me should be expected in the dollar in the coming years. And that analysis was favoring a Republican in office, because for the last 40 plus years, you look at the different administrations, and it's very consistent that you get a declining dollar during Republican administrations and an advancing or at least stabilizing dollar during Democratic administrations. And part of that is, at times that's been intentional, like in the 80s, where James Baker and company during the Reagan administration wanted to see a much lower dollar to help U.S. exports and make them more attractive to global buyers. And so you've seen this. It's been a very consistent movement in the dollar, and I've been explaining why I thought late 2016, early 2017 was showing a major top in the dollar, and that I thought 2017 would be when the dollar starts to roll over and turn down, and that seemed to favor a Republican in office if that same correlation was going to hold constant as it has for the last 4 decades.
How does that affect equities?
I have been describing some of, not related specifically to that, although I think that is going to be one of the corroborating factors, but why I thought that we would see this topping process rolling over to the downside into late 2016, and then the actual downside starting to unfold in 2017. And I correlate that to a lot of converging cycles. It's the synergy of all of them that really has me standing up and taking notice. And I've continually hammered on the just recurring, consistent, persistent nature of this 40-year cycle, and even an overriding 80-year cycle that's even more powerful and more specific in nature. And I've talked about, you even look at, take the 80-year cycle, for example, and you look at the late 1770s. Obviously, America was just forming at that time, but you had a big currency crisis with the Continentals that were issued and plummeted in the late 1770s. You can't really, not a lot of financial data to correspond to that, but the overriding factors were related to what goes on in this cycle. Then you look at the late 1850s, 80 years later, and you had a currency crisis going on with regard to gold and silver. You also had the beginning of real racial strife and turmoil in America, really starting around 1855. And so 2015 would be the 80-year cycle, actually 160 years, but the second phase of 80-year cycle from there, which is when we really saw things escalate in America. And you had the Panic of 1857, linked to, again, the issues with currency, issues with interest rates and the economy. And then you fast forward 80 years to the late 1930s, and really the crash that often gets overlooked in 1937-38, where the stock market lost close to 50%, depending on what stocks and what indices you're looking at, between 40 and 50% in a year and a half. And one of the intriguing parallels there was that interest rates had been dropping since the trough of the market crash and the low point of the preceding depression, much like they have been in the years leading up to the present here. And suddenly in 1936, you had a shift to interest rates turning up in 1937, and along with that, you had the markets, the stock markets crashing and seeing a 40 to 50% decline, along with currency issues as well after confiscation of gold and silver in the years before that. So each time you have some very strong parallels, and it's one of many reasons and many factors. Again, I just have to stress the synergy, not just the individual application of one or two cycles and one or two fundamentals. It's all of these coming together that just have been convincing me that I think that we're in for some struggles in 2017, 2018. And I also think it's going to be a resurgence of inflation, price inflation in commodities and in gold and silver, which ties back again perfectly with 40-year cycle. It was 1977 to 80 when you really saw the surge in commodity inflation, and then interest rates had to respond to that, and the dollar plummeted during that time. So that 40-year cycle is certainly something that's clamoring to be heard and to be monitored and paid attention to.
We'll have more with Eric Hadik right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Eric Hadik. Eric, I thought we'd see a natural reaction with gold going up after the election of Mr. Trump, and it did so, but I was surprised to see that equities went up at the same time. Were you surprised to see both go up?
Well, they really haven't gone up in tandem. Gold went up when the global markets were panicking overnight, and now in the morning, gold has dropped almost $60 off of its high as the U.S. stock market has rebounded. So it's definitely an inverse correlation, and it fits with these dollar cycles that I've been discussing, where I thought we would see one more rally in the dollar. It fits with the November cycles in precious metals that I've been discussing since mid-year, actually even since late last year, but where I thought that a second bottom in precious metals would wait until very late 2016. And so it would not surprise me at all to see gold and silver see a final sell-off and the dollar see a nice rebound here. The dollar also took a big hit overnight and is beginning to recover. I'm looking at late November, early December to be a key transition point in a lot of those markets.
Copper, I've noticed, has had a nice rise. Is that usually an indication that there's more industrial activity taking place than we might suspect?
At the very least, copper is certainly considered a harbinger of future commodity inflation. As you say, it's often looked at, copper and lumber and maybe one or two others. They're often looked at as a leading market with in industrial and economic activity. And I've been watching that as well, and I think that that just is reinforcing what I'm talking about with gold and silver, that I expect them to be turning back up in the near future, but they have, in my opinion, one final spike down. But copper does appear to be corroborating that and leading it, as is often the case. So yes, I think that is a sign of some economic recovery, and certainly plays into my expectations for commodity inflation steadily developing in the coming years.
Also, a factor I think you're going to have to start putting into the stock market. We're used to copper and other materials being considered, but what about California approving the recreational sale of marijuana? Are marijuana stocks going to be something people have to keep an eye on now?
That I couldn't tell you, and that's one of those things that I think is so in its infancy that if there's one thing you can expect, it's probably a lot of volatility, and some of the stocks being complete just blowing up in people's faces, whereas other ones starting to build some upward momentum. But it's something that I wouldn't even begin to speculate on at this point.
It's like any new product, I think, where, of course, people would connect, it's going to be successful. It has to be with 39 million Californians probably born with an idea that maybe this is a good thing. But on the other hand, for most of the U.S., it's still an illegal product, and that brings up a lot of questions, especially when it comes to fundraising, because most major banks won't have anything to do with it.
Well, and it's also the whole idea that the stock of something is not always directly correlated to the value or demand of something. And a perfect example is the divergence and the lag and sometimes the disparity between, say, even gold and silver stocks. And if you look at where, gold and silver stocks got to late last year, back down to 20-year and almost historic lows, whereas gold had really only retraced about 25% of its 10-15-year run-up. And that often, even if the metal starts to turn up, if gold were rallying and the stock market itself was taking a hit, like I expect to see in 2017, then something like gold stocks has a real dichotomy there, a real battle between its precious metals value and its equity value. And something like marijuana may be in high demand, but how the company that is representing that is run is a whole different story than whether the product itself is growing in demand and growing in value. It comes down to each individual stock and also the stock market as a whole having at least temporary, limited time impact on the value of it. So it's often very dangerous to just correlate one product or one arena of the market and see that it should be growing, and so all of a sudden you assume that any stock in that arena should also be going up in value. That's often not the case.
Well, we saw that in the Vancouver area where a marijuana company anticipating legal marijuana in Canada just didn't have the financial backing to last, and they went under.
Yeah, and you're going to see a lot of that. in markets like this, not necessarily in that market, but when you speak of something that's so pioneering right now, and like with a lot of new products, new businesses, the ones on the cutting edge, the ones out on the front lines are often the ones that get slaughtered too.
And Eric, before we go, I'd like to congratulate your Chicago Cubs for winning their first World Series in 108 years.
Thanks. I don't think I had anything to do with it, but it certainly was an uplifting thing around here. They were a fun team to watch throughout the year,
and they were also my late mother's very favorite team. She loved Sammy Sosa, who played, by the way, his minor league ball here in Vancouver.
Did he?
Yeah.
I was not aware of that.
So there you go, little Vancouver connection. We have to take what little we can get, considering how bad the Canucks are this year. Eric, thank you so much for chatting with us.
Thanks for having me back, Jim.
My guest has been Eric Hadik, president of InsideTrack.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. They didn't pull our account. Our YouTube channel is Talk Digital Network. Questions for the show can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.